everyone, it's me again, Adriana.
And Shannon.
On 5 Minutes TP. So we're very excited today because we're going to be talking about a very interesting topic that is very close to our hearts, which is intragroup services or services transactions between related parties.
So yes, how do we deal with intergroup services is slightly different than manufacturing or trading businesses. Although the goal is the same, we're trying to find the arm's length price, there is a different approach in the way in which we go about it.
Okay, excellent, Shannon. So just for our viewers' understanding, when dealing with intragroup services, what is the first thing that we have to look at? Is it true that all we have to be concerned about is about the markup?
Well, actually, the markup, of course, is important, but there are other things that need to be considered, and we often find that this is overlooked by many taxpayers. So the first thing we need to know is whether the service is actually chargeable, a chargeable activity. So chargeable means that if an independent party in similar circumstances would have been willing to pay for the service, so is it a chargeable service?
Oh, okay, Shannon. So I guess some of our viewers may be wondering, so what kind of services are chargeable? How come there are services that are not chargeable? So are you able to explain to us a little bit more about what that chargeability means?
Yeah. So as a general practice, an activity is chargeable if it provides a benefit to the recipient that is worth paying for. This is also known as the benefit test. So it's not only about that you've provided a service to another entity, did that entity in receiving that service receive a benefit? And so it's not even just about that they received a benefit for the service being provided. The second bit is, would they have actually been willing to engage an independent party to provide that same service? And that's really where we're getting at with the benefit test.
Yes, Shannon, I think one of the things that we have heard in the market is that the benefit test is to some extent a very challenging area that is always disputed by tax authorities because it requires a level of judgment.
Yes.
So what are your thoughts on that? Is that correct?
Yes, so some tax authorities have been very strict in asking for tangible evidence of a benefit, including, say, number of phone calls, evidence of travel, evidence of forms in relation to the service at the moment. So they're really getting into really validate that there was a benefit being provided.
Yeah, so basically going a lot beyond just the TP documentation, but asking for request forms and evidence of travels, emails.
Actually, some example is what we often see is a benefit, a service being provided, even in relation to, say, maybe trade shows.
Yeah.
Now, if there is a trade show, is the trade show, and maybe there's a lot of effort going around on providing and preparing for that, marketing services, etc. Is there a benefit to just the parent company, or is that really a benefit to the local entity? And what we often find is that that a lot of the subsidiaries will rely on their parent company to help them with some of their marketing information, collateral, and there definitely is a benefit that they would have had to get a third party to provide that. Another very common service we see is also around human resources, where you may have a core human resources expat team, maybe coordinating all your expats around the globe. So it's really being able to evidence that you did get a benefit and that you would have actually had to pay an external provider to provide that.
So basically that in reality it was not only a contractual obligation, that the services actually was rendered in reality.
Yes.
So Shannon, why don't we discuss a little bit about what is chargeable and non-chargeable activities, and let's start with non-chargeable. So is there any parameters followed by tax authorities that they consider non-chargeable activities?
Yeah, so really good question. So as we mentioned earlier, with services, it's not just about the markup. A lot of people focus just on the markup, not actually on the cost base. Now, if you think about it, if you've got a really high cost base, doesn't matter what your markup is, we're talking big numbers. And we've seen that time and time again. So yeah, there are certain activities that are considered non-chargeable by the majority of the tax authorities. For example, you've got shareholder activities that are performed only because of the ownership link with the subsidiary. Could be things like issuing of shares, costs related to reporting requirements of the parent company. So maybe the parent company prepares quite a bit of reporting and they want to cross-charge some of that to the subsidiary. If it's of no benefit to the subsidiary here, and they wouldn't have paid a third party to do that, you're really looking at it being a shareholder type cost. Cost to raise funds for any acquisition. We've seen others that try to charge things like cost of a due diligence. But if the due diligence isn't for the benefit of the local entity here, more of the group, it is considered a non-chargeable.
Yeah, or even also mergers and acquisitions as well. If there is any cost related that only benefit the parent company, most likely you're not going to be able to substantiate that it's a chargeable activity, isn't it?
Yeah.
So now in the opposite side, what are activities that are usually considered chargeable by tax authorities or are acceptable in general terms? But of course, disclaimer, depend on the facts and circumstances
of each company. Yeah. So with chargeable, again, it goes back to that benefit test. Is it something that there was a benefit? So we can talk a bit about, there can be some like for trade shows. So I see that's, especially in the Asia region, we see that a lot. There'll be a trade show, maybe an Asia trade show, and the head office may actually support from a marketing perspective. They may even put, coordinate activities. And so some of those items would be chargeable. Human resources, looking at expats and the mobility of expats, you'll often find that the core HR team will have a policy for all of their expats throughout a region or throughout the globe, and it'll be managed centrally in conjunction with the local human resources. So those types of costs, common ones could, accounting, audit's an interesting one. So we had, when Sarbanes-Oxley came out in America, and there was a big focus on performing a lot of these audits, was with some clients, that cost, that Sarbanes-Oxley, now remembering it is American factor, but some clients, we did deem it to be chargeable because they did need internal audit. There was a benefit, they would have paid a third party to do it. So there was that. With other companies, there was no chance that they ever would have done it, So other ones could include financing. If you've got a core financing team, like a treasury type team. Technical service is very common. You might have a hub that's providing the technical service, and but again, you still need to look at the benefit test, and that's what it comes through to. We often say to clients, and I just say to them, look, get your Excel out and go through all the expenses, and I want you to fill out, add a few extra columns to that, what was the expense, what was the amount, what was the benefit, what was the benefit, and would you have paid a third party? Now, if you can't answer that for all of your items, then that's going to tell you where it's not chargeable. Yeah,
and I think another good point that the OECD guidelines, the new chapter on low-level services, touches is on duplicate services.
Absolutely.
So there is a trend now that to disallow duplicate services. So if you could speak a little bit about that.
A big example of that one is accounting. And going back to that parent company report, you've got a duplication of some of those services. Now, maybe head office prepares those reports, but if you don't need it here locally, it's really a duplication. If they wouldn't have engaged a third party, and that's your ultimate test of not having that situation.
And I think a good point there also is that when you have in your organizational chart two teams, saying head office accounting, and then in your subsidiary accounting also and legal, then you have to really be careful to understand the scope of that support and maybe just make an argument that is supporting rather than providing, because otherwise you bear the risk that is duplicate and therefore disallow it, isn't it?
Yeah. It's important to always remember when addressing the chargeability of services to think back, would you have paid a third party? And I know we've mentioned this a few times, but I can tell you we see this time and time again where no one has gone through, going back to what I said about the Excel, they haven't gone through the list of expenses, added the column, was there a benefit, and would they have paid a third party? So would you have paid a third party in the absence of it being able to be performed related party? Would you have engaged the third party to do it? Would you train actually maybe another team member to do it? If you weren't getting it from head office, would you have to train another team member? If the answer is yes to any of those questions, it shows that you really need the service. And that it's definitely something that we can charge for because it's a benefit has been provided.
Yes, excellent. So I think that's a wrap from us. Thank you very much for viewing our video. I hope you enjoyed it. Don't forget to like us and subscribe. If you want to contact us or you have any questions, follow the links that will come after the video. And that's it from us. So
Yeah.
bye bye,
Bye.
and don't forget 5 minutes TP.
Thank you.